Lemonade, a hard stop for short sellers. Ciao guys, good morning. And this is the digest of Lemonade Q3 earnings, which at this point have become very, very boring, and I'm happy about that. Basically, everything the management has said it would happen across the last several months and quarters, it is happening. So, um, trust in management is all-time high. Fundamentals are all-time high. And even after the 34% gaining of stock price after earnings, I think the stock is severely undervalued. So I would be a buyer if this was not just this was not already one-fourth of my portfolio, so a very big position for my policies. Lemonade accelerated 30% year-over-year, IFP growth, revenue even more. So this is exactly the cruise growth pace they said they are going, they want to keep for years to come to 10x the company. So again, everything is on track on the base of what they said. Very interestingly, car accelerated to 40% growth, and most of these new customers were CAC-less acquisition. So this is very important, probably is crucial because this is backing up my initial thesis. You can go to my Substack lorenzo2cents.com. Here you find the direct link where you can see the original thesis that was a path to growth with near zero marginal cost. This was hyperbolic, of course, but it's happening, guys. I mean, all these customer they acquired, they didn't spend anything. All what it took was just a push notification to current existing rental, home, or pet customer, an email, a push notification on their app, whatever, and they bought car insurance. So CAC less acquisition, zero customer acquisition cost. This is very important, and I think this will become more and more true as Lemonade has more data. His AI operating system becomes even better. Everything is automatized, and of course, I think this could turn in sort of winner takes all scenario because as Lemonade becomes better in pricing their policies, evaluating risk. It means they can be more competitive. They gain market share. Competitors lose market share, and they have more resources to even lower the price, so to pass these gains to their customers, meaning they can gain more customers. So it could get very interesting from here. Car growth is basically fueling the growth of the company. Not that the rest is not growing, everything is growing, but it's very interesting how car is growing 40% year over year. They said this will accelerate further, and even the gross loss ratio is coming down. No? So I printed at 76%, down from 82% of the previous quarter, a big drop. And under my adjusted rule of 40, that you can I have shared already this many times, so just go back and check my articles how it is calculated. But basically, it is showing what is the trade-off between the loss ratio and growth, IFP growth, enforced premium growth. You see that Lemonade took over Root, so it's taking the lead on the car, just looking at car segment of their business. Lemonade printed 60, scored 63, Root 57. Of course, it's not completely fair, this comparison, because still Lemonade car is smaller than Root. So in absolute term, it's quite small. It can grow fast, and even in relative term, it's smaller. So it's not completely fair, this comparison, but I think it will be interesting to keep tracking this KPI to see how it evolves. But I mean, it is clear again, what they did already on the other insurance segments, home rental, they are doing the same for cars. So it's working, guys. And they said they will set a new record again of loss ratio. Uh, Here they are talking about the complete gross ratio, not just car, that also came down. Trailing 12 months loss ratio is a 67. Down again, Q3 is a 62. So very, very low numbers. But I think what is important here to remark, guys, and I've explained this several times in my previous article, even in my original one, what they are chasing is not the lowest loss ratio. They are chasing the good trade-off to maximize gross profit, and just gross profit dollars, not percentage, absolute in absolute term. So just read this. Here, this is a quote from the Q3 um, earnings call from Daniel Schreiber, and he's explaining very, very well what I've already anticipated several times in my articles. So they are not chasing, as I said, the lowest loss ratio. They are not chasing the highest growth, but they are chasing the highest, so to maximize the gross profit dollar. Sometimes it means that you may want to have a higher loss ratio because it allows you to have lower price and gain more market share. So, and that's why I think really, again, this rule of 40, adjust the rule of 40, that is summing one less net loss ratio plus IFP growth. This is something mine. I mean, I never seen it uh, on anyone else thesis or articles. So this is something I coined. And but this metric, I think is very interesting to monitor because it's telling you, look, they are accelerating. And here, I mean, this is a monster. They are both improving loss ratio and growth, but at a certain point, the loss ratio will go higher. So red bar will become smaller. They will worsen the loss ratio just to prioritize growth because it means higher gross profit. So pay attention to this. This graphic is very important. Okay, it's beautifully growing here. And yeah, here you can see the gross profit that is growing. As I said, it's a monster from last year over year, it doubled. And yeah, another metric that is confirming everything is on track, thesis is working, is IFP per employee. I'm stressing a lot on this metric as well. Keeps growing over the last 24 months. The number of employees it's flat, so they are growing the business 30% year over year, but headcounts is remaining the same. So, and this results in this IFP per employee skyrocketing high, right? So I think once it will go higher than 1 million probably. I mean, again, it will get very interesting. They will be profitable at that point, and they will scale even faster than this. Last, I think, indicator I'm going to show today is the LAE ratio. That is the cost it takes for them to manage claims on top of the claims itself. And 7% is already the best in the industry. It's the same level or even better than incumbents that are an order of magnitude or bigger than them. And of course, with scale, this comes down. So Lemonade, with its small scale, is already able to be equal or even better than incumbents. Uh, Same more or less of Root, 7.5%, even if it's not maybe that comparable because Root is just focused on car. And I think with since car has higher um, premiums, probably the cost of managing a claim it's better, it's lower in proportion. But anyway, so just for the record to mention. But what is most interesting here is that Lemonade think they are going to uh, to cut in half again, this meaning 3.5% LAE. I don't know if this value even exists in this industry, if anyone ever reached this value, probably no. So again, this is confirming the thesis that Lemonade has an edge thanks to AI. It's working. Conclusion: we will have fun, guys. So I think I've saw some number, not expert about this, but I think shorts didn't cover yet. Short interest should be, we will see next time it gets updated, but I think it's still quite high. So this means that all short sellers are going to cover their position as soon as possible, or I think there is an hard stop for them that is Q4 2026. Why? Because this is the quarter Lemon has said they will be profitable, EBITDA positive, and they got asked even if they consider to postpone these to prioritize growth, but they said no, this is staying. And so I think at this point, I mean, no excuses. There will be no bear thesis left here. So I think honestly, shorts will be burned much sooner than this, but this is definitely an hard stop in Q4 2026. If the stock should be still this price, probably will double or triple in 1 week. This is what I expect. So take your popcorn, guys. We will have fun. And last update on my deep dive to date performance, which is how the stock is performing since when I publicly shared that my deep dive and that I was invested. So I committed basically in this stock, and I committed in very few stocks. I have just eight in my portfolio. So since this date, that was a bit longer than 1 year ago, September 24th, the stock is up 4x, even something more. So that was so far good investment. My thesis is materializing. Very happy, guys, and I wish you the best. Have a good investment. Bye.